We've talked a lot about trading stocks, commodities, currencies, cryptocurrencies, but we haven't covered options yet. Well, now is the time. Hi, this is Tim from TradingStrategyGuides.com. Welcome back to our channel. This video is a simple step-by-step guide on how to buy put and call options. While this strategy is focused on the stock market, it can easily be applied to other asset classes like forex currencies and commodities as well. For the purposes of this video and in the interest of simplicity, we'll be focusing only on buying put and call options. Selling options is a totally different animal, and it requires much more experience to properly understand the inherited risk associated with this type of options trading. Why? Because when selling options, you can't control the downside risk, so we're only going to talk about buying puts and calls, which does allow us to control the risk. This is one of the most successful option strategy, not because it doesn't have losses, all trades have losses, but because it's very consistent in providing you with profitable trade signals. 15 minutes is the preferred time frame for our options trading strategy. Let's start by talking briefly about options. There are two types of options. A call option gives you the right to purchase the stock at a specified price, called the strike price, and on a predetermined date, called the expiration date. A call option is typically used when you expect the underlying stock to go up in price. A put option has the opposite effect of a call option, as it gives you the right to sell the stock at a specified price, again called the strike price, and on a predetermined date, again called the expiration date. A put option is typically used when you expect the underlying stock to go down in price. Now, the only indicator you'll need for this strategy is the Relative Strength Index, or RSI indicator. Since options trading is constrained by the expiration date factor, it's important to select a technical indicator that is suitable for options trading. The RSI indicator is a momentum indicator, which makes it the perfect candidate for options trading because of its ability to detect overbought and oversold conditions in the market. You should be able to find the RSI indicator on most all trading platforms. The RSI uses a simple mathematical formula to calculate the oscillator. That's the extent of the mathy stuff on the RSI. In fact, you don't even need to remember this. That was just for the math geeks out there in our viewership. All you need to know is how to interpret the RSI indicator. Basically, an RSI reading equal to or below 30 indicates the market is in an oversold condition, while an RSI reading equal to or above 70 indicates an overbought condition. At the same time, a reading above 50 is considered bullish, while a reading below 50 is considered bearish. We'll use the default RSI indicator settings, which is typically a 14-period length. Okay, let's go over the strategy rules. Step number 1 is to wait for the first 15 minutes after the stock market opens to establish your market bias. Our option strategy does not focus only on the price, but it also makes use of the time element. The stock market opening price is usually the most important price. Typically during the first minutes after the stock opening bell, we'll note a lot of trading activity because that's the time when major investors are establishing their positions in the stock market. If you've been on this channel for a minute, you know I'm a firm believer in smart trading. And to do that, we have to track the smart money action in the market. You know, the big guys, the big bank and big hedge fund traders. You will also know that I don't like to stare at charts all day, so our trading strategy will attempt to limit our screen time. The New York Stock Exchange opens at 9:30 Eastern Standard Time, or New York time, which is the same as 1:30 p.m. GMT for those trading from Europe. This brings us to step number 2. Make sure the 15-minute candle after the opening bell is bullish. As we established earlier, we only want to trade in the direction the big guys are going. If we're looking for call option buying opportunities, we want to make sure the smart money is buying right at the open. Of course, if we're looking to buy put options, we want to see sellers appear right after the opening bell. Also take note, if we have an opening gap up in the price, it means the buying power is even stronger and we should put more emphasis on this trade setup. Step number 3, check if the RSI is above the 50 level because this is a bullish momentum signal. We use the RSI indicator for confirmation purposes only. We want to make sure that once we have identified the bullish price action, the momentum behind the move is confirmed by the RSI indicator. We're not concerned with overbought and oversold conditions because the market can stay in those conditions longer than we can stay solvent. In this chart, note that the RSI is well above 50 during the first 15 minutes of trading. The price action is confirmed by the RSI momentum reading. Now that the first 3 steps have been met, step number 4. Buy a call option right at the opening of the second 15-minute candle after the opening bell. Now that we have confirmation that smart money is buying, we don't want to lose any more time, and we want to buy a call option right at the opening of the next 15-minute candle after the opening bell. As easy as it sounds, this strategy only requires you to put in 15 minutes of your time each day. You'll either get a signal or not, but in order to take advantage of this trading strategy, you will need to exercise discipline and not take any trades if you don't have a signal. So at this point, our trade is running and in profit, but we still need to define when to exercise our call option and take profit. Step number 5, choose the nearest expiration cycle. For day trading, choose the weekly cycle. When you buy a call option, you also have to settle an expiration date as part of that contract. So how do you choose the right expiration cycle? Well, because we're most likely going to sell our call option the same day as we purchased it, it's most appropriate to choose the weekly cycle. And now, the most important step, step number 6, take profit and sell the call option as soon as you have 2 consecutive 15-minute bearish candles. Knowing when to take profit is at least as important as knowing when to enter a trade, probably more so. We want to get out of our position as soon as we see the sellers stepping in. We measure this by counting 2 consecutive bearish candles as a sign of bearish sentiment entering the market. You don't want to exercise your long call option because you don't want to own those share stocks. You just want to make a quick profit. Now, the above was an example of buying a call option using the options trading strategy. Use the exact same rules, but in the opposite direction for buying a put option. Here you can see an actual buy-put option example using the options trading strategy. We've applied the same steps 1 through 4 to help us establish our trading bias and identify the buy-put option trade, and followed steps 5 and 6 to identify when to sell the put option. This is one of the best option strategies because when trading stocks, it's important to have a good understanding of the market sentiment and how the big players are positioned in the market. Another important reason why this is one of the best options trading strategies is because you're not required to be glued to the screen all day. And you know, I like that one the best. That's it for today's video. I mentioned earlier that I would tell you about the Comcash Alerts app. With this app, I can share all of my trade setups and my trade tracking and even chat with you guys and answer questions. The trade setups from the Trade Picks videos are available on the app, plus the other trades I personally take every week. Here's a screenshot of the live trades as of Tuesday afternoon. This Apple trade has been great. It hit our first target a couple of days after entry. We took half off for profit and moved the stop to break even on the remainder. Currently, we've got our trailing stop locked in more than double that amount on the second half. The Comcash Alerts app is available for iPhone, Android, and desktop browser. Click the link in the description below for more information. And come back for my videos on Monday, Wednesday, and Friday at 3 p.m. New York time. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, smash that like below. Subscribe and hit the bell if you want to be notified of our videos in the future. Have a great Wednesday, and I'll see you on Friday.